let's call this Ichimoku notes. So the basic anatomy of the Ichimoku Cloud is essentially anatomy. Basic anatomy consists of a slow moving average, fast moving average, a delayed moving average. Actually, it's not really, it's a delayed price plot, dynamic support and resistance. Okay, so I'm going to touch on these two first points here. So the slow moving average, this is called your Kijun, and this is called your Tenkan. These are the technical names for it. On my chart, the fast moving average is the blue guy, and the red moving average is the red guy. The red moving average is the slow guy. So essentially, we can think of these as the equivalent of a 50 and a 200 EMA, where this is going to be more price sensitive, and this is more of a long-term mean reversion target. In trending markets, we will see the price above the Tenkan, which is above the Kijun, or vice versa. We see price below the Tenkan and below the Kijun. So in trending markets, there is a stacked configuration of the price action, Tenkan, and Kijun. Now, when we look at this, it's not enough to just say, well, price is above and then above and above. With the cloud, it's a little bit more nuanced than that. So with the cloud, you have, the actual cloud itself, which is something like this, right? This is also called the Kumo. And in trending markets, we want to see the price above or below. So additionally, we want to see the price. We want to see price action above or below the Kumo. So for example, here, this is considered a bullish trend. We see price above the Tenkan, above the Kijun, and above the Kumo. For further strength of trend, there's an additional thing, which is called the lagging span on the indicator. But what is the actual name? I forget what this is. This is called the Let me see. Lagging span. I always forget what this one's called. Chiku span. That's right. Chiku span. Chiku span. And essentially what this is, if we look at just the lagging span, this is just a delayed mirror image, or not a mirror image, a delayed plot of price. So if I turn my chart into price, you can see that it's just like this guy's here, this guy's here, right? Here's the boom. So it's like this like shadow image of price. And when we're in a trending market, we want to see the price, or we want to see the lagging span also stacked in the configuration. So we end up with this like sandwich of activity where we see the lagging span is above the price is above the Tenkan, Tenkan's above the Kijun, and everything else is above the cloud. Or if it's a bearish trend, it's the reverse. Also, we want the, I'll say lagging span because I always forget it. Lagging span to be either above the stack or below the stack. So in an objective bullish trend equals, and a bullish trend stack equals, or looks like lagging span above price, price above Tenkin, Tenkin above Kijun, and all of that stuff above the Kumo. Will you put the colors by the Kijun? Yeah, so Kijun equals, Kijun equals red, Tenkin equals blue, Shiku is yellow, Kumo equals blob. Make sense so far? Okay. So 40,000 foot overview. Green. Well, no. So this is the Kumo, and this is the Kumo. This is like the actual cloud itself. So it's not red. It's both. It can be green or red. Oh, depending on above or below, sort of. So like you can see instances, like honestly, you can just ignore the color. The color is irrelevant, because here, for example, we see that the price is above a red cloud, so it's like, and right here, price is below the green cloud, so that's not quite the same. You can just honestly kind of ignore it for the most part. That's why I wrote blob instead of color. I'll just write cloud. So one of the nice things about the Ichimoku Cloud system is it gives you an objective view of trend and trend strength, but it also gives you mean reversion targets. So say, for example, if you look at the daily, it's a little bit better because things happen a little bit more often. But if we're looking at the daily, so here's an example of like a strong trend, right? You will see these occasional, zoom in a little more. You'll see these occasional taps of the Tenkin. And every time it's like a question and answer. It's like, are we still trending strongly? And it's like, close above, cool. Close above, cool. It's when it closes below that you say, okay, well, where are we mean reverting to? And then we would target the Kijun. The hell was that? My stream just crashed? Are we still up? I think we're still up. That was weird. My file explorer just popped up and gave me a weird message. Cool. Okay. So what else can we say here? We can say in strong trends, described above, the market will have a series of questions and answers. If we are strong, the market will test the Tenkin and close back above. If the market is needs to mean revert, you will see closes below the Tenkin and immediately target the Kijun. So blue. Makes sense? So in strong markets, we'll see this sort of activity, and when we need to mean revert, we're here. Now the market is still, just because we are testing the Kijun, That does not mean we are in a weakening bull market. That is just the mean reversion target. Oh, Bitcoin's finally moving down. So let's say okay. Any questions about this so far? I'm going to go back to my rising wedge chart. Let's see. Oh, it's starting to break out of the rising wedge. Starting to break out of the rising wedge here. We'll check back in on it in a sec. Might be a fake out. We'll have to wait for the close, which is in 30 minutes. Okay, any questions about the Ichimoku stuff so far? And of course, for bearish trends, it's the opposite, right? Now we can talk about some setups here. We just do this so it can be up. Let's talk about Ichimoku Cloud. Let's talk about cloud setups. So common cloud setups, we have the C clamp, we have edge to edge. And those, for me, those are the big ones. Those are the ones that I really like. We have TK cross. I'm going to go into detail about these. So a C clamp occurs when a market is highly overbought and takes the form of a C, where the Tenkan greatly deviates from the Kijun. And it looks like this. It's like it'll be trending up together, and then the Tenkan will go flat like this, and it'll start to curve like this. So I'll look for some examples. So here's an example of one that didn't actually play out. Here's a bearish example. You can see here we had a flat Kijun. So if we went back in time, like here, it needs to actually be back further. We want to see a flat, flat Kijun. So if we went back in time here, this would be a C clamp setup. So we can see here that the Kijun stays flat and it stops trending with the Tenkan, and then the market will target this. Now, if the market is super, super bearish or super, super bullish, it won't even meet that target. So when we look at something like this, we need to approach this with a target in mind, but obviously a manage your risk on the trade. But let's see if I can find a bullish example. They happen a lot on like the 4 hour. Let me look at the 4 hour. Let me see if I can find one real quick. I'm trying to find one that actually plays out. I find that the bearish C clamps don't play out as often as the bullish ones. Why the F does Twitch default to 480p? I don't know. I'm streaming in 1080, so it's probably just a U setting. You might be on like on a VPN and it's just degrading the quality. I'm trying to find some. I'm surprised I can't find any examples here. Boom. So here's one that kind of played out, but it like blew through it. Let's see if I can find a clean one. Sorry, guys. Thought this would be easier to find. So you can see that these setups, they're not like super common, but when they happen, they're really reliable. Damn, I really can't find any. This is crazy. Interesting. Okay. I'll have to look in other markets, and I'll post it with the notes when I post it in the Discord. But either way, you guys get what I'm saying, right? So you get this little C shape. And then when we're talking about edge to edge, probably overbought or oversold. Edge to edge is reversal setup that triggers when the price is trending in one direction. Market moves opposite the trend, and the candle closes inside the Kumo. So these are way more common. So here's an example of one right here, right? So if we went back in time, here's our edge to edge. It closes inside, and it targets the other side. Sometimes it breaks out. Sometimes it just slaps the other side and comes down. There are some criteria that makes this a little bit more predictable. So the flatter the opposite side of the cloud is, the less likely it is to break out and will just be a mean reversion target. So what I mean by that, okay, so you can see here that when this thing started out, it was flat, but as this thing progressed, the cloud came down, and rather than slamming into here, it kind of just like snaked out the side. An example of a flat one, let's see if we can find a flat one. So here's a flat one right here. So because this is support and resistance, if the cloud is converging like this, that means that the resistance is weakening and it has the opportunity for the market to snake out the side. Now, if it hits the other side and it's flat like this, it's very rare for it to just like go straight up through it. It does happen sometimes, but you know, a setup's a setup, and you know, we can see what happens there, right? What else can we say about this? If here the candle closes inside the cloud, and then closes back outside the cloud, exit trade, as this is considered a failed mean reversion. So example for that. Let's see if I can find one. So here's one here. So if we go back in time, we see that the market came up, closed inside the cloud, closed inside the cloud, closed back outside the cloud, and if we go forward in time, see how that played out. Right? Now here's an example of when it actually just full-blown breaks out at the top of the cloud, right? Doesn't always happen, but sometimes it does, right? It just, the market conditions are right, and it just gets going and it breaks out, right? What else do we want to say about this? That's probably sufficient for now. Now TK cross, Tenkan Kijun cross occurs when say occurs when the market is at a decision-making point. Is it, will we reverse? Or will we consolidate sideways before continuing? So I'll take some of this other stuff off the cloud. Let's get rid of you. Yeah, so let's look at it this way. So here's an example of a TK cross, right? We were in a very strong market this whole way. And as we start going sideways, we get this fella right here, where the Kijun goes up and the Tenkin comes down. It's very similar to like with EMAs, you have like a golden and a death cross, like similar kind of concept. And in general, when you get a TK cross, that means that the trend is weakening. But sometimes you get a really powerful continuation signal. In general, a TK cross is a sign of weakness in the trend. A powerful continuation signal is a TK cross that recrosses. So, for example, here, we get our TK cross, we get our recross, and the market continues upward. Another TK cross, a recross, the market continues upward. Now, just because it crosses, that does not mean that it's going to recross and continue. Those are exceptions to the rule. Here's an example of when it crossed and it didn't recross, right? So here's your cross, your recross, your recross, and the trend begins. You know what we know happened here. Again, same thing here. Cross, we get our cross, our recross. It's like way in there. Our recross, and the market goes bang. So if we get something like this, where we get a cross, a recross, and a recross, that's not good. This is the exception, not the rule. Damn, that was a lot of notes. I feel like I probably left some stuff out, but for the most part, that is like Ichimoku Cloud 101 type stuff. I mean, there's a lot more nuance to it if you want to get crazy with it, but like if you want enough to get by and like just have an objective read of the market, that should be enough, right? And don't worry, like I'll post this in the Discord with the stream notes. So if you want to get the notes, go ahead and join the Discord, and you can find the notes there and all the videos. So I also want to take the time right now, while everyone's brains are filled like a jelly donut, to announce that I'm going to be accepting applications to join the trading group. Right now, the Discord that's open is just for the stream and like, you know, the different content that I have, like Twitter and stuff like that. I've had a ton of people asking me about joining the actual trading group itself, where everyone is discussing the markets. You know, it's been around for a long time, and I'm actually going to open up that application today. So if you want the application, you're going to have to join the Discord. I'm going to have a little bit of a form there, just with like some question and answers. Basically, just to weed out if you're a dickhead or not is really what it boils down to. Because we've really cultivated a really good group of people. It's been closed for the last year and a half, and if I'm going to reopen it, I want to do it right. So if you're interested, go ahead and join the Discord, and after the stream is over, I'm going to make the channel visible to you, and you can apply that way. So, all right. I just like crammed a bunch of Ichimoku stuff at you. Do you guys have any questions about anything, like literally anything about it? Because I know that's just a ton of information. And it's going to take a lot of time to like probably read through a lot of this again because it looks confusing. But once you're used to looking at what you're looking, you don't look at it in its individual parts. You look at it in this holistic view, and you can kind of just. I should probably add this too. I should say best used to analyze trend and sucks big time in macro consolidations. Think Cosby sweater. So for example here, like this is stuff like this is just pretty like just useless, right? Like stuff like that is like, that's not a trend. Like this isn't, now once it breaks down, that's of course useful again, but once it's in this consolidation, it's pretty useless. It just gives false signals and all this other stuff. Oh, I should also talk about a cloud breakout too. So let's talk about, I'll add this to it too. Cloud breakout. A cloud breakout is the birth of a new trend, bullish or bearish. Bullish or bearish. And occurs after a prolonged downtrend or prolonged uptrend. To be considered, I'm gonna make these notes. To be considered a strong cloud breakout, we need to see cloud or price trending outside of the cloud and the stacked strong configuration described at the top of the notes. So cloud breakout would look something like this. Let's see if I can find one. So here, let's go back in time. We're time travelers now. So quick question for you guys. Is this, at this current configuration, considered a cloud breakout? This is where you guys type yes or no, or give your answer as to why you feel that way. And while you do that, I'm gonna drink some water. No one's gonna answer me. No sweater. You mean like the Cosby sweater? Well, no. The answer is no, because the lagging span is not above the cloud, right? So if we progress in time, I'll do it slowly. Now, at this moment, this is considered a cloud breakout. We have our stacked configuration. We're above the cloud, and we can see what happens after this. Right? Let's see if I can find some more examples. So here's a bearish example here. We can see here, the market finally breaks down through it. You see our stacked configuration. This is a cloud breakout. There's another one, stacked configuration, cloud breakout, vice versa. So yeah, that's cloud breakouts for you.